Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Ben Jones, Senior Index Specialist with Nasdaq Index Research to discuss the ongoing search for yield. Ben, it's great to see you as always. Welcome back to Trade Talks.
Thank you. Thanks for having me on again.
All right, you got it. Let's talk about the environment and what it's like for investors seeking income.
It's a tough one, Jill. I mean, there's a lot of different things that are happening at the same time that I think causes a lot of uncertainty for income investors, and I think pose a lot of challenges. And I think the one thing that sticks out is just the low interest rates, right? We continue to see a low interest rate environment. Just looking at a long-term picture going back well over 15 years, you can just see the trend of interest rates continues to push lower, even after we've seen the 10-year yield index pop from its low from 2020. The 10-year still yielding below, about 1.5%. So for those that are looking for income, it's an environment that it just starved for yield. I think you also have a situation where there's a lot of uncertainty with taxes and what the current administration is going to do going forward. There have been some plans to change the top individual tax rate, potentially change the capital gains tax rate as well. So this could pose some challenges for investors going forward and how they manage their positions and how they manage their taxable income, and more importantly, how they generate income. And then finally, the changing inflation narrative, right? Whether you believe it's transitory, whether you believe it's real, no pun intended, the fact of the matter is that inflation is rising. We just saw the annual inflation rate reach 5%, the highest that I think we've seen since 2008. So anyone who is relying on a fixed income is going to see higher prices at the store or at the pump, et cetera. So that's also a challenge as well. So for those that are relying on a steady income, whether it's from dividends or bonds, they're going to be looking for higher yielding areas. So they need a solution, and they need a solution that can be able to handle different types of environments.
All right, Ben, let's talk about the Nasdaq 7-handle index. How does that work?
Yeah, so this is an index that I think tries to solve some of those problems in a unique way. It's a well-diversified, multi-asset portfolio, pulling from both, fixed income and equities, and you could argue maybe from some alternative sources of income as well. So, simply put it, it's a rules-based portfolio the index is comprised of about 19 different ETFs. If you start at the top, it's basically an equal-weighted index, 50% in a core allocation strategy, which is comprised about 70% fixed income, 30% U.S. large cap. The other 50% of the portfolio is a tactical sleeve using the Dorsey Wright Explorer portfolio concept, which uses momentum to identify some of the strongest areas based off of momentum in some areas that generate income. So think MLPs, preferreds, municipal bonds, utilities, covered call strategies, and basically every month it tries to identify and orient and allocate and overweight the strongest areas in that space. So using that concept of 50% kind of core allocation, stocks and bonds, but then another 50% that is tactical, that is able to adapt to changes in market trends and performance, you have an index that is ultimately designed to generate a higher yielding outcome. The index also employs leverage up to about 23% of the portfolio as well to help improve the overall return profile going forward.
And then what does the index look like today?
Yeah, it's fascinating when you look at it today, right? So the core side of the portfolio is going to be unchanged, right? 70%, core bonds, aggregate bonds, the other 30%, across U.S. large cap equity. I think the Nasdaq 100, I think the S&P 100. The Explore side, which is the tactical sleeve, is overweight or really tilting towards bonds right now, whether it's high yield bonds, preferreds, even active fixed income. You do see lower kind of weightings towards traditional kind of equity income areas, think growth and income, dividend equity, utilities, and even REITs. So that's where it's positioned right now. The Explore side, the tactical side, is overweighting fixed income. From a performance standpoint, given this composition that does change over time, at least the Explore side, to perform rather well year to date. Over the past 12 months, you're seeing about 14% compared to the aggregate bond index, which is actually in the red. On a 3-year roll, you see it up about 36% on total return basis. The aggregate bond index up about 17%. There is an ETF that seeks to track this index. That's the Strategy Shares Nasdaq 7-handle ETF, symbol HNDL. What's interesting, Jill, is that this strategy has resonated with investors. year to date, we've seen inflows north of about 460 million go into this fund, bringing its total AUM close to about 650 million in assets. So we do see it as a popular strategy for investors right now, just given all the uncertainty and challenges when they're trying to generate income and invest in income generating areas.
All right, Ben, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.